All right, so guys, let's jump into it. We're going to be talking about Liberation Day, according to President Trump, and what this means for the crypto markets. Stick around. My name is Paul Barron. Welcome back into Tech Path. Let's get started. I do want to thank our sponsor, and that is Coinbase. Coinbase is a great place for you guys to get started in crypto. And right now, with the markets where they are, we could see some of the lowest prices on some of these cryptos that we've seen in this cycle. Coinbase is where you want to go set up your account. Down below, use our link. It's going to give you up to $200 in crypto to get started. Let's get into a couple of topics here. Obviously, the tariffs is on everybody's mind this week. It's official. Reciprocal Tariff week is here. President Trump has called Wednesday as Liberation Day. 20% plus tariffs coming on to 25 countries. Right now, the estimate on this is going to be somewhere around $1.5 trillion worth of imports just by the end of April. So think about that. From April, then run that through the end of the year, and we are talking multi-trillions in terms of what we are going to see around tariffs. Other things that are playing into this, I want to kind of jump over to this article right here, which is where we look at what countries are going to get targeted, because there are several countries that have very specific issues with it. He's imposed tariffs on aluminum, steel, autos. He's also increasing tariffs on all goods from China. This is the bigger one. And then you look further, the administration tariffs would be focused on around 10 to 15 countries with the worst trade imbalances. We'll show you some of that in a second. And then February also, Trump signed a memorandum that directed the U.S. trade officials to go country by country. So they've been building on how to make this possible for a few months. So I think this is going to be a very big statement on Wednesday from the United States. Last week it suggested that we might scale back some of the plans, perhaps imposing tariffs in some cases at lower rates than countries charge the United States. So I'm looking at this still on a situation where Trump is using it as a negotiation tool. Now, if you look at where the asymmetry is around tariffs in general, I'll focus on this right here, the economy tariffs on the U.S. versus tariffs on them. And you can kind of see free trade, the kind of the darker green there, Canada mostly, next Mexico, some of the South American countries, Australia. Then you go into lower than U.S., really the only area when you look at that is moving into the Middle East. And then exceeding tariffs, almost every country outside of that, there's many of which, all those red ones, are exceeding 5 to 10 points in tariffs. Now, that doesn't mean that all these countries are, getting over in the United States, because I think a lot of this is really dependent on very selective areas, whether it's steel, cars, food, all those kind of things that play into different classifications. And I think that's what we will start to see is more of a case-by-case situation with each country. But you have to remember that a lot of this and the reason that the Trump is going this direction has really come from this chart right here, the latest trading partner in comparison to China. If you go back to, let me kind of highlight that right there. If you go back to 2000, you can kind of see the United States pretty much led the way in terms of trade globally. But as you start to look at 2020, just 4 years ago, China has pretty much positioned as the global leader, and we, the United States, has pretty much let that happen. Now, I think Trump is at least attempting a repatriation of some sort of manufacturing. The question is how much pain will the market take to allow this to happen? I'm going to go to another one right here. China, Japan, South Korea, all of these have said we're going to respond, and we're going to respond quickly and swiftly. So Mexico has already announced that their response is coming as soon as April 3rd, literally the day after. We will see immediately if this begins trade wars, because remember, this is a part that does affect the market, is trade wars, because it generates uncertainty. Now I want to go over to a clip real quick. This clip will go into a little bit more around Trump's personality versus politics. Take a look.
The stock market is not the economy, but it is a very clear voting mechanism. And what's clear is that many institutional and retail investors think that the current economic regime is pushing us toward a recession that we don't have to have, right? Donald Trump has insulated himself from any feedback loop or any sense of criticism that his tariff policy might not be the best course of strategy for American industry or global relations. This is a New York real estate guy. He loves making big, awesome pronouncements and then using those big, awesome pronouncements in order to negotiate little one-on-one dealings where he can wrest for himself a personal sense of power or money or pride. And I do think that the early returns, if you look at consumer sentiment, if you look at the stock market, if you look at the 10-year yield, you have a range of, let's call them, aggregated economic information telling us that the economy, consumers, employers, investors do not like what's happening now, which is going to be a really interesting test case. Maybe Trump's presidency is a kind of right-wing abundance, right? And I think it's a worthy question, right? Is Donald Trump just doing his own version of abundance? And we should, even if we disagree with his process ideologically, sort of root for the outcomes that are likely under it.
All right, so you can see that there is one of two ways this is going to fall. And I believe this is a very pivotal point in Trump's really his whole campaign as president this time around. But where I think this could play in is the long-term effect it could have on the entire Republican Party. And that's the thing that is going to be very questionable. Now, Chamath Palihapitiya talked about this a little bit deeper because Trump has pretty much been on this case for a very long time. But listen in.
I stumbled into an interview he did, Nick, maybe you can find this, with Larry King in 1987.
We don't have free trade right now because if you want to go to Japan or if you want to go to Saudi Arabia or various other countries, it's virtually impossible for an American to do business in those countries. Virtually impossible. So the fact is that you don't have free trade. We think of it as free trade, but you right now don't have free trade.
The delicate balancing act, though, is that after 20 years of globalism and a perverted version of free trade, it is incredibly difficult to do that without these whack-a-mole problems emerging in other areas, right? Whether it's inflation or whether it's retaliatory tariffs or consumption taxes, all of these complexities, I think, are what has to get figured out. But the structural reason of why tariffs make sense is not necessarily to overly penalize one country over another, but it's simply to say, if you charge 5%, we charge 5%. If you charge 10%, we charge 10%.
And I think that's the question because he's really kind of at a point of no return now because he's doubled down on this so much that if this does not work, it pretty much decimates his presidency and possibly even his legacy going forward. This is the problem that we are facing right now because it will affect what Goldman thinks is possibly a recession, like many have said, one that we don't have to necessarily do. Now, the key here is the probability around 35%. This is up from 20. That's a big, big move, guys. Also, they lowered the world's largest economy GDP forecast from 2025 to 1.5. That's another big hit. 3 interest rate cuts, each from the U.S. Fed and the European Central Bank, will most likely take place. Also, cut its year-end target on the S&P. That would be down from 5,700 or from 6,200 to 57. And that itself is enough to get people a little bit concerned how this is going to play out. Now, you can think about that, and you have to worry about where it's going to hit most. And that's going to usually be at the American consumer. And this is where it gets very interesting because this will be the supporting mechanism for Trump's campaign as a president this time around. And I think the key here is they're going to take the biggest hit. Watch this right here.
The brunt of this price increase that's it's coming due to tariffs is absolutely going to be borne by the American car buying public. If you look at some of the numbers from last year, the average transaction price on a new car was nearly $50,000. The average monthly payment on those cars was over $780 a month. So that's a big chunk already, right? If you're a 2-car family, you're nearly $1,600 a month just in car payments. You add 25% to that, and some of it, like I said, will be 25% on the whole car. Some of it is 25% on parts of it. Those numbers are going to go through the roof.
So that in itself is definitely going to be an issue that is going to cause a lot of situations to occur in the economy if we don't see these concessions or some sort of negotiation that is done by the Trump administration in trying to ease this, hopefully throughout the rest of the year. If you look at the 10-year inflation expectations, this is where it gets a bit scary, 4.1% over the next 5 to 10. This would be the highest reading since 1993. That's the highest reading since 1993. And go back and look at that, because that is even pre-2008. And that was really kind of the last real, economic pressure that the market had. And I think this is going to be something that Trump, along with the U.S., will have to address, whether this is a long-term run or something that is looked at over the next 18 months. Because remember, we've got midterms coming. This could absolutely blow the midterms up, which would pretty much make Trump fangless for the last two years of his for his presidency. So this is a very critical time right now. This was an interesting letter from Larry Fink. He hits on it. He says, hey, U.S. doesn't get its debt under control, the deficit could keep ballooning, and the American risks losing the position as the world reserve. Now, this has been something that everybody's been talking about for years and years and years, as if the United States would be losing the world, when you look at the potential for the world reserve currency. And I think the thing that plays into this is what assets would be the alternative. Many people would look at maybe other currencies, unlikely, but whether it's a Bitcoin or it is digital assets, gold, many of that is being looked at right now because of the potential and the impact of what we're going to see in a short period of time. Here, of course, is Emmanuel Macron, who has said that they think that the euro can dethrone the U.S. dollar for the world's reserve. I just don't see that happening with the issue that is facing Europe right now and what it's going to look like in terms of the ability to support one of the largest economies, the largest economy in the world outside of China. So you have to look at that along with other things. And I think the factor is this a short-term fix for the market right now, or short-term pain with long-term gain opportunities? Well, there's a couple of analysts out there that think that maybe it will be, but take a look at this.
Is this a decent time to be stacking?
I think so.
You do, at 80.
Yeah, I think, part of this was Bitcoin seasonally was just not going to be attractive until after March ends, and now we're finally exiting March. And so I think not only is the calendar looking better, but as you're saying, the Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year. I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
The one that is, to me, a bit questioning right now is still the issue of the uncertainty. The uncertainty, I think, is the key that the market really relates to, and that is going to be the factor going forward. I want to take a look right here, because if you look at the S&P, this is now officially hitting its new low in 2025, and this is down 10.5%, guys. That is a significant drawdown on what is typically one of the safest bets out there for American consumers, investors, many people in mutual funds, etc., are now looking at their portfolios in a completely different way. And they're blaming only one person right now, and it really boils down to Donald Trump and his strategy around tariffs, because that is the factor that's drawing this market down. Now, you got to take a look at that factor, and then you compile that with what's happening with Doge, because this is the other issue that is playing out right now. Here's a clip on Elon and whether or not even blockchain is going to be involved in what his efforts are. Take a look.
The names are similar, but they're doing two very different things. In fact, I was going to call it like the Government Efficiency Commission, but that's a super boring name. And then the internet said, no, it needs to be called the Department of Government Efficiency. I was like, well, the internet is right. So we changed the name from Government Efficiency Commission to Department of Government Efficiency. But there are no plans for the government to use Dogecoin or anything, as far as I know. So that they happen to be similar names, but really we're just literally trying to make the government 15% more efficient.
All right, so he's talking about Doge, the token, obviously the meme coin, not necessarily going to be involved in this. I think this also plays into maybe his strategy around blockchain. Is he going to implement some sort of blockchain for the need that we have as a government to see a full transparency of what's going on? That is the big question right now, because I would think by now Elon would have at least given some indicator that this could be an alternative, at least from a technological side. So I'm still a little bit concerned about that. Obviously, whether you don't like him, what he's doing or not doing with Doge, I think the biggest issue right now is that we are facing a very different time in American politics and a very different time on the investing calendar. So let me know what you guys think down below in the comments. I always love to get your feedback on this. Do you think this is a short-term pain, long-term gain, or do you think this is a massive miss by President Trump and it's destined for failure? Let me know in the comments. Check us out over in the Diamond Circle. It's a great place to get additional content. Also, get me a Telegram because I'm chatting with you guys all the time, in and out of there every day. You can reach that. There's a link down below. And follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.